Time for another stock review. This time we are talking Zomedica, ZOM. Pharmaceuticals, yes, we're going back to the laboratory, but with a furry feel. This time we're talking about veterinary services, health and veterinary services. So can we make money from this stock? Is it a good investment? Well, it's the lowest price I've ever done on a review. 13 cents right now. Flippin' heck. It's been requested by one of our members, so we're going to do it for you now. Zomedica. Is this a stock you can make money from? Well, in this review, it's going to be the most honest review you're going to see on YouTube. I'm not sponsored by anyone to do it. The company don't pay me to do it. I just do it for my members. It's part of the service if you are one of my members. And this is a very long-awaited one, actually. I've had a few people ask me to do this one. So in this review, I'm going to share with you a back test of the stock. I'm going to share with you inside trading, who's buying on the inside, who's selling on the inside, the balance sheet, the profit, the loss, the intrinsic value. I'm also going to share with you the website so we can have a look at that. How does it compare to the S&P if you invested in that? What about the latest news, latest breakthroughs? All of that is going to be covered in this video. I'm making it during a live show, so any of our members could comment, leave a comment. It'll be in the video forever. It's an evergreen video. It will live online forever. I also have a Meet the CEO series. Perhaps you would like to invite the CEO, or perhaps you'd like to build a community and make some money for yourself, because this stock, no doubt about it, this video will trend #1 on Google and YouTube. Most of my videos do now for the stocks, and this one, being such a small company with probably not a lot of media attention right now, I'm guaranteeing it will rank #1 on Google and YouTube. So if you build a Reddit channel or a Facebook page or a group and you want to use my content and you're one of my members, I'll make videos for you to put on your group. That way you can build a community around the business. That way you can attract the company to see what you're doing. Maybe you invite them on the show. Links below in the description of this video is the invitation to the CEO if you want to bring the CEO onto the show. But you can build a whole community around it, and I'll support you if you are one of my members. So another little feature there we're giving now to our members. I'll make videos for your content, whether it's a Facebook group or a Reddit channel or whatever, based around your favorite company. All right, tap the like button if you like this. If you don't like it, please tap the down like button. I don't mind what you do. It just engage in some way would be wonderful, or subscribe. Let's go now into the stock. What is it? Let's learn about Zomedica. Why is it only 13 cents? Okay, without further ado, let's get started. We're going to start off nice and simple, and then we're going to get much more depth as we go. Right, the stock all the way to $2.40. So it's always been a penny stock, but now it's all the way down, and it's been going sideways. Perhaps this looks like a bottom. If you can see, back in 2019, it traded down here, spiked up. So you want to look on the investor relations pages and see what caused this. Well, we can see here, this was COVID. This was COVID. It wasn't March COVID. If we look back, 2020, this was COVID. When COVID hit here, it actually went down, but then people needed treatment, but I don't know what it was, but it certainly popped up and fell away. So this is another one of those macro condition stocks where, some outside influence changes the direction of the stock. I don't like stocks like that because, you have to ask yourself, why will it happen again? But this was before COVID, way before. This is back in 2018. It collapsed, but it spiked on COVID, maybe because people were trading it. I don't know. A lot of people got on Robinhood at this period and started to buy penny stocks. Maybe that's what it was. Who knows? Anyway, let's go into the details. Zomedica operates as a veterinary health company which engages in the discovery, development, and commercialization of pharmaceuticals for the companion pet. It offers products for dogs and cats by focusing on the unmet needs of clinical veterinarians with TRUFORMA biosensor platform is is designed to assist practitioners in the diagnosis of complex conditions. The company was founded by Gerald L. Solensky on January the 7th, 2013, and is headquartered in Ann Arbor, MI. The listed name is Zomedica. Okay, Michigan is where it's based since 2013, and the CEO is Larry C. Heaton. I'd love to have Larry on the show. Please reach out to Larry, whether you email or you set up a group yourself online in some group. That would be fantastic. I'd love to have him on the show. Now then, if we look at the margin requirement, no surprise here, Zomedica being such a stock at 13 cents. If you buy it on margin, it's regarded as very high risk. So it's very high risk if you're using margin. So it's the maximum, 100%. Very low volume. You can get in this stock and it's hard to get out. And when I say hard to get out, there's so low volume, you might want to sell it, but no one's prepared to buy it for, say, 10% less than what you want to get for it. In other words, you might say, I want to sell it at today's price, 13 cents, but no one's buying. You have to sell it at 10 cents. That's how it works. Okay. No dividend, of course. Price to earnings ratio, it's losing money, negative $8.59. No surprise there. 52-week low is 12 cents. It's been just a bit lower, but not much. This is virtually the bottom. 52-week high is 24 cents. Okay, so we're right at the bottom again now. Market cap 127 million. Very, very small company indeed. Earnings. Well, as you can see, it's been losing money, but there's some good news here. Look, it has been improving. It's been going sideways, dropped off a little bit, and then since 23, we've been going up. The next earnings is April the 1st. If this gets a lot of attention and we build a community around it, maybe someone will set up a Reddit group or a Facebook page on the stock, and I can provide content to you. If we can build an audience around this stock, I might cover the earnings. And as we will rank number one for it, you never know. Could get a lot of excitement as the earnings as things do seem to be improving or expecting to be improved. That's good. So we like that. All right. Okay. Very nice indeed. What about who we're investing with? SNDL. I don't know Castor Maritime. I don't know Toro. I don't know any of those actually, apart from SNDL, but all very low penny stocks, as you can see, which means we're going to get volatility. We're going to get a lot of gamblers in this stock. There's no question about that. It's going to be a very volatile stock. Anyway, let's now move on to the website and further information before we go into the numbers. If you like this, tap the like button and please do subscribe to the channel as well. Okay, here we go. Let's have a look now at the website and see if this company can make you any money. At the end of the day, you are investing and you want to be able to make money from this stock. Let's see if we can. Let's go over the numbers and let's study the website first of all. Are you ready? Okay, here we go. First thing we're going to look at is the website, Advancing Animal Healthcare in Veterinarian Success. Let me just zoom in a little bit so you can see this. At Zomedica, we're committed to meeting the needs of clinical veterinarians in ways that provide both patient and practice health. It's our mission to advance the effectiveness of veterinary practitioners by offering innovative, unrivaled products and services. Let's scroll down, see if we can meet a little bit here. Meet our family of brands. These are their brands: ZOM, DX, Assisi, Pulse Vet, revolutionary therapy to decrease pain, inflammation, and anxiety. A little bit of information there. We're talking animals today. Look, should we leave that on the screen? Shall we leave that on the screen? That's going to get views, isn't it? That's going to get views. We probably should put some little cats and dogs in this video. I'm just saying it would, get a lot of views. Bit of clickbait there. I'll probably put a little cat on the screen. Anyway. There you go. What do you think? The little sad little dog there with his ears flopping down. Oh dear. Oh, it's going to get a lot of views, this, just because of what it is. I'll leave it on there for a minute. That's what I'll do. Right. So, but we want to look at the latest news around the stock. Zomedica announces publication of research concluding TRUFORMA platform is more accurate diagnostic test for feline hyperthyroidism. I apologize, I'm not a scientist or a doctor or a vet. Than chemiluminescent immunoassay CLIA platform. I'm an investor, not a scientist, all right? Forgive me for the mispronunciation of these names, but I did try, okay? And I'm reading them for the first time as well. Let's have a look here. Zomedica offering point of care diagnostics and therapeutic products for equine and companion animals. Today announced the publication of a peer-reviewed research study favorably comparing the capabilities for the diagnosis of feline hyperthyroidism of its novel point of care TRUFORMA bulk acoustic wave BAW diagnostic platform for immunoassay platforms currently broadly utilized by reference laboratories globally. The authors conclude that this new TSH BAW assay more accurately identifies hyperthyroid cats than current TSH CLIA assay and would improve the early diagnosis of hyperthyroidism. Okay, some good news for the stock, and I apologize for looking to the left. When the text is so small, I have to look on a mirror screen to see it. Otherwise, it's unreadable. If I stare at the screen, anyway, doesn't matter. You don't need to know that. Okay, let's move on now and look at the numbers. At the end of the day, we are investors. Can we make money on this stock? Let's now go and look at the numbers. Here we go. Let's get straight into it. So we're going to start off with the financials and start by looking at the intrinsic value. Now then, the intrinsic value, which is accurate, there's no warnings, says it's only worth 10 cents. Worst case scenario, it's only worth, well, pretty much the same, right? Okay, all about the same. So basically, we're overvalued. Even at 13 cents, we're overvalued, and it's an accurate intrinsic value. There's no warnings to suggest that it's wrong. It's accurate. So it's saying it's only worth 10 cents. Well, that's where it is today. It's at 13, so it's overvalued. Let's go for the fundamental analysis and look at the revenue. 24 million, up 7%, and we're expecting things to improve. We're gonna hear from the earnings in a week or so. But this is a bit of an S curve, if I'm honest. Things, if this continues, the revenue is going to go up dramatically. Operating income is up 2%, and we're expecting that to really jump in the coming year. Net income is also up 23%. A little bit of a drop, but then we're expecting it to rise. Again, financing cash flow, we're just guessing here. Investing cash flow is down 93%, which is a positive. Operating cash flow is negative 2%. Let's look at the balance sheet. 275 million, of which 106 is cash. So we've got a decent amount of cash here, no doubt about it. 38% of our money, of our assets is in cash. Great, we've got a bit of cash. 14 million only in liabilities. That's a good average. That's a good ratio, I beg your pardon. Long-term debt, just 1 million, but we have cash of 106 million. Very good balance sheet. Even though the company is only at 13 cents and perhaps it's only worth 10 cents, it's got a good balance sheet, plenty of cash. Long-term debt is only 1 million, and we've got 106 million. So we've got no debt at all to worry about at all. So it's going to be a great balance sheet, well funded. But as we've explained before, it's not enough just having a bucket load of cash. You've got to be able to turn your cash into money, into a business and make money. Anyone can just have a bucket of cash, but can you turn your cash into a business? I mean, you could give me $10 today. I've got no debt. I've got $10. My balance sheet's going to look perfect, all right? But can I make my $10 and grow into a business? All right, that's the point. Okay, so let's carry on with this and look at the efficiency of the business. Let's scroll down. Look at the margins. 69% margin. Very nice indeed. It was a lot lower. It was negative just a couple of years ago. 69%. That's a good margin. But again, we've got to compare to the competition. I'll give you the links for that in a moment. Operating margin is still losing money, but look how it's improved. Net margin, massive improvement. You can see things are a lot better than they used to be. We're moving in the right direction, even though it's still losing money, right? There you go. Straight to that. Look at that. That's one of the highest solvency scores I have ever seen, which is great. But remember, like I just said, you might have $10 in the bank and no bills and no debts, right? Well, you're going to have a great balance sheet, aren't you? It's when you start investing and spending money on the business, then you start getting debt. Can you then make money out of that? That's the question. So it's starting in a good place. Well-funded, nice amount of cash, no debt. Great. You might like this and think this is a good time to get in, perhaps. Profitability score, 33. We're giving everything a positive tick there. Positive gross profit, ROE, ROIC, exceptional revenue growth, all good. 33%. That's good. Not massive amounts of profit, but we are expecting that to improve. So if you like this sector, if you like little furry cats and kittens, you might like this stock. Not that's the reason to invest in this company, but anyway, it's well funded. It's not going bust. It's got a good balance sheet. Things could look good. This could pop once our video goes out. A lot of attention gets drawn to it. And if it does well on the earnings, then things could look up. All right. So far, I wouldn't buy a penny stock. I only invest in the S&P anyway. But for you, it's a potential buy if you like this, because the valuation, I would say at 10 cents, really, even though it's overvalued at 13 cents, you know, it's all about where we go. It's all about the guidance. It has cash. It's expected to increase. Revenue is increasing. Cash flow is increasing. No debt. This is a potential for you if you like this sector. Wall Street are giving it a 236% upside. Again, massive amounts of potential, but, you know, penny stocks are always high risk. Because who wants to, institutions, who's going to touch it? A big institution is not going to suddenly buy this unless there's a breakthrough, of course. And it gets some media attention. But right now, the only media attention is us. Competitive landscape, you want to look at the competition for margins, but their margin, I would say, is pretty good, though. But go and do that. The links are below and above my head and in the description. You can check out the competition and see how their margins compare. And a margin is what is termed as the moat, how much room it's got before it suffers. Anyway, ownership, very good news. Very good news. Insiders have been buying the stock during the last 12 months. Insiders have bought 130,000. Was December 15th. So only recently, perhaps preparing for the earnings. Not a huge amount, but 130,000 when you think of the market cap is not insignificant. Insiders have been buying, not been selling, and increasing their buying. That's positive. That most certainly is positive. And that was bought by one of the directors, Powers Johnny D. So that's all good. Very good indeed. I like that. Insiders buying. No sentiment, no media, nothing to report on the news at the bottom here. Nothing, because no one's talking about it. Well, that could be a good thing, because if you create a Reddit channel or a Discord channel or a Facebook page, and I'll provide you with information and cover the earnings, this stock could rank number one, could pop, draw attention to itself. Good. All right, okay, let's have a look now at a back test. No surprise, we've got to do it. If you invested in the S&P back in 2018, you've now got 21 grand from 10. You've doubled your money. With Zomedica, you've gone from 10,000 to 723 in red, you can see. But it's pretty much returned to its flat line. So is this a time to buy it, waiting for a pop like that? Well, find out what caused this, and perhaps it is. Perhaps it is. So let me wrap up this stock and give it my final thoughts. Should you buy Zomedica? Is it worth investing in? Well, it has a good balance sheet. It has an earnings round the corner. With no media attention, we will get attention for this stock. 13 cents. It is intrinsically overvalued, but at 10 to 13, when it's at this level, it's really virtually immaterial, to be honest with you. Still relevant though. Insiders are buying. All this needs, in my opinion, I mean, it is high risk. It's a penny stock at 13 cents. But the good news is, when I say high risk, it's not really high risk of going bankrupt. It's got a great solvency score. It's not going bankrupt. So you can buy it not thinking, oh, it's risky because it's going to go bankrupt. It isn't. It's got a good amount of cash. It's got no debt. That doesn't mean to say it can't go lower, and it's not to say it's definitely going to go up. But with the attention that this video will get, with the fact that earnings are around the corner, with a very low price, it appears to be like free. It's not, but that's how people will look at it and go, it's 13 cents. Remember, not everyone can fractional share. Not everyone has access to being able to buy $5 of Tesla, for example. So a lot of people were drawn to this with the attention it gets, and particularly if you set up a group around this stock and we get the CEO on the show and we talk to them, this could really get some momentum. So it could be a trading stock for you. So definitely a potential buy. I can't say it's a buy because anything this low, is not screaming to be bought. But as a trading position, as a scalp position, as an opportunity to make some money quickly, definitely. Only because of the lack of media attention, and we're now going to get it. The fact that earnings is around the corner, we could cover the earnings, and potentially they're expecting some good news. On the other basis that they've got loads of cash and no debt, this is one of those sort of stocks that even if it's not a long-term investment, could be 100% or 200% bounce on the earnings, particularly if our video trends. So definitely worth considering. So a potential buy from me, definitely. Click above my head for all the links down below in the description if you want the invite the CEO. Down here you'll find the extra channel as well. Go and check that out. And over here I'll put all my reviews. I've done way over 100 reviews now, and Meet the CEO series. You might like to invite the CEO on. There you go. Another review done. Until next time, as always, take care of yourselves and each other.